Unveiling Non-Resident Rental Income Tax Rules in Canada. Understanding non-resident rental income tax requirements for Canada. Canada is a popular destination for real estate investment, attracting many non-resident property owners who earn rental income from their Canadian properties. However, as a non-resident property owner in Canada, it's essential to be aware of the tax implications and requirements associated with generating rental income in the country. The basics of non-resident rental income. Non-residents of Canada who earn rental income from Canadian properties are subject to taxation under the Canadian tax laws. The Canada Revenue Agency, CRA, requires non-resident property owners to report their rental income and file an annual tax return regardless of the amount earned. Section 216 Tax. One crucial aspect of the tax requirements for non-resident rental income in Canada is Section 216 of the Income Tax Act. This section outlines the rules that non-residents must follow when reporting their rental income to the CRA. Under Section 216, non-residents are required to file a Section 216 tax return, even if no tax is owed, to declare their rental income and pay the applicable taxes. Calculating non-resident rental income tax. The tax rate on non-resident rental income in Canada is determined based on the gross income earned from the rental property. Non-residents can deduct certain expenses related to their rental property, such as property management fees, repairs, and maintenance costs, before calculating the taxable income. However, it's essential to keep detailed records of these expenses to support the deductions claimed on the tax return. Residency status and tax obligations. It's important for non-resident property owners to determine their residency status for tax purposes in Canada. The residency status will impact the tax obligations and filing requirements for rental income. Non-residents who are deemed residents of Canada for tax purposes may be subject to additional taxes and reporting requirements on their rental income. Penalties for non-compliance. Failure to comply with the tax requirements for non-resident rental income in Canada can result in penalties and interest charges imposed by the CRA. Non-resident property owners who fail to file their tax returns or report their rental income accurately may face consequences, including fines and legal actions by the tax authorities. Seeking professional advice. Given the complexities of the tax requirements for non-resident rental income in Canada, it's advisable for non-resident property owners to seek professional advice from tax experts or accountants. These professionals can provide guidance on tax planning strategies, deductions available, and compliance with Canadian tax laws to ensure that non-residents fulfill their tax obligations effectively. Conclusion? In conclusion, non-resident property owners earning rental income from Canadian properties must adhere to the tax requirements set out by the CRA, including filing a Section 216 tax return and reporting their rental income accurately. Understanding the rules and regulations related to non-resident rental income tax in Canada is crucial to avoid penalties and ensure compliance with Canadian tax laws. By following the guidelines outlined in this article, non-resident property owners can effectively manage their tax obligations and meet the legal requirements for generating rental income in Canada. Need guidance on non-resident rental tax compliance? Call 416-283-8774 or visit theaccountingandtax.com.